So hi guys, welcome back to another episode of the technical breakdowns. So on Monday I had shared with you some of the ideas that I have or I had on what markets are likely to do, but I was very careful to pinpoint that in case anything changes or as things unfold in the market, I was very open to changing my opinions on the market, which meant that I was not really sharing advice on where I think markets are going. I was just sharing with you how I personally break down markets and what I pay attention to. So today is on Wednesday. Probably you'll get this video towards New York session or around the New York session at about 5-6 Kenyan time, and probably again things will have changed. But I'll share with you what I think about markets right now, some of the ideas that I have around where markets are going, and some of the updates that I've made since Monday. So what I'll do is I'll go through the same set of markets that I went through. I looked at the 5 markets that I normally track on a day-to-day basis, and I'm going to do a repeat of the same. So today I'm going to look at the same markets. I'll start off with gold, since this is more of a status update rather than a new video. I'm not going to go through all the technical breakdowns that I normally go through, which is starting from the weekly. Instead, I'll just look at what happened within the previous 2 days, what's happening currently, and what that means for the next 2 or 3 days before we do the next Zoom session on Monday. So if you look at gold has been now declining. I think we officially went into bear territory once we broke the 1700 level. Our markets really tried to go above the level, but you can see very quickly we came back below 1700, and now we're trading at 1634. So the last 2 days, which is Monday and Tuesday, we've seen price is not going up. So we've tried going up a couple of times, but prices have been closing lower on both days. So if I just go down to the 4-hour chart, you'll see that on Monday I had said that I can't see any clear pattern that can help us in execution. However, towards London Open, I spotted a clear pattern which suggested an entry at around 1662, 1663. That was the exact top that the market arrived at, and then we had a clear breakdown in the collapse of this market. We're now heading towards 1625, which is where I've placed my target. You can see it clearly. I think at 1625 it's a good place to exit this market. However, I think this market is likely to go to 1600. In the long term, I'm looking for gold to go to 1500. I think I wouldn't be amazed with a move to 1500, especially with where rates are currently. So we can see the yield curve crossing the $4 mark, the 4.0% mark, which means markets have already priced in a 4% rate hike in the coming few weeks by the Feds. If we go to 4.5, I think markets have already priced that one in. It's just a question of knowing how far the Feds will go, and I think these other asset classes are just reflecting that, gold being one of the markets that is reflecting that. So the next market that I'll look at is oil. Oil has been sliding lower, so here I was utterly wrong on this one. And this is also a very good signal. I think I've updated my views on this one quite well, because I have spotted some things. So last week, about one, we had the OPEC coming out and saying that we are likely to cut production by 2 million barrels. That resulted in oil jumping from 80 to 92. And then last week we saw the first decline, which looked like a correction before continuation. But clearly these markets are not as strong as they were initially are, which says the trend now is to the downside. Despite the production cuts by OPEC, I think oil is still remaining relatively weak. That means markets are still likely to keep moving lower. I think oil prices are reflecting in or are pricing in a recession. If you look at the general trend that normally happens, is oil prices will tend to do very poorly during periods where we're heading towards a recession. I don't think this is an exception. So I've pivoted now from being very bullish on this market to being quite bearish. I'm looking for this market to actually come back to about $70 a barrel before this year ends, I think. But my first target will obviously sit in at $75 a barrel. Then my second target will come in at $70 a barrel. However, that is again subject to change if we get any change in fundamentals or if the price changes. I think this update that I've done is just by looking at what the fundamentals are pointing to versus what the price is doing. And you can see clearly price is winning over. That tells you the general consensus of the market is still bearish. So as much as you have bullish news, markets are not factoring in those bullish news. That's a very bearish factor in the market, because no one is willing to buy despite the good news that is coming from OPEC. So if you go down to the 4-hour time frame, there is no clear setup, at least for me. We've gotten a decline this week from around 87.8, 87.9 to trade as low as now 82.5, about a 500 pip collapse. Maybe next week, if we see a pullback to about $85 a barrel, 86 point something, in the extreme cases probably even 87.5, then I'll be looking again for a decline to $80 a barrel, 77.5 and probably 75. If we keep moving lower this week, then I think oil prices are likely to just keep moving lower to $80 a barrel and significantly lower as the markets will be moving. So that's my outlook on oil. The Dow has been quite sideways. It's not had strong movements to either side. So this one is, I'm still not very clear on my opinion on this one. However, the technicals are pointing to some different things happening in the market. For example, by just looking at this daily chart, it's quite clear that the patterns are still suggesting we're likely to see a downward move. How far? To about 27,500. Why? As long as we're below 31,000, which is in line with that third trend line bounce, I think we have a chance of a bearish play, taking these markets back down to about 27,500. If we get a good close above 31,000 today, then I think these markets will pump up a bit. The case for that, fundamentally, not really there. I think technically and fundamentally, these markets are still 70%, let's say, bearish, and you could have a 30% or even 60-40. You could go with that as a good estimation of what is likely to happen. Obviously, my skills are based on my own subjectivity, so it's not like I'm looking at any tools, but there's a reason I keep doing that. On the 4-hour chart, if you go down to the 4-hour time frame, these markets don't have any clear pattern. Instead, we have sort of like a flag formation, which can be clearly seen on the longer time frames like the daily, but when you come to the 4-hour, it looks more like a sideways movement where we had a drop from this prior high taking us this high. We then had a double top formation, and then you had a market move this high, creating a new high, then quickly selling off. The question is, will this sell-off continue, or will the buying continue? If the sell-off continues, I think the right place for me to execute a short position is, I don't want to close below 30,000. I think that's a good place to start thinking about pivoting from longs to shorts completely. But before I see that, I think it's right for me to just stay out of markets and watch what will happen in this particular market until that major level, which is 30,000, is taken out. Now, if I go down to the pound is more or less also in some sideways movement with some consolidation taking place at the fair value area. So you can see we had a rally from 1.05 to 1.15, 1,000 pip rally. We then had a 500 pip correction, and now it looks like we were gearing up for another 1,000 pip rally, but clearly it's not gaining any momentum to the upside. You can see if you look at the candle formations for the last 3-4 days, we have really tried to break past this trend line, and we are not really getting that move to the upside. So in line with that, what do I think? If we go back below 1.125 and probably close below 1.1, I think this market will sell off all the way to the 1.05 again. If we close above 1.125 and we break this initial high which has been established, then these markets could rally to 1.15, 1.175. But looking at what the dollar is doing, I think I'm more bearish than bullish. I expect these markets to continue the trend. I think the trend is your friend until it breaks. We've not seen any sign of a break, and the fact that you've not seen any sign of a break suggests that you should still anticipate a bearish move. So on the 4-hour chart, if I just go down on the 4-hour chart again, you'll see that this market has rejected which level? It's rejected the 1.1375 level multiple times. Now it started declining lower. We're taking out 1.125. If we take out 1.125, there's a high chance we'll close this gap. So I think 1.125, 1.1 could be easily attained. That suggests that probably I'm more bearish than bullish, and I think these markets are likely to keep on tumbling lower as the dollar is getting stronger. That's my outlook on the pound. Next, I look at euro yen. This was one of the trades that I was very accurate on. I think what I anticipated has clearly played out. We were talking about a break of 145, took place, a rally to about 147.5. You can see where price is, and now it looks like we're getting a correction. I wouldn't be surprised by a move back all the way to $145 a barrel. 145, I mean, on the yen. It looks like my head is has gotten used to oil prices. But anyway, this is the yen, so I'm looking for a move back to about 145. If we break 145, I'll be looking for 143.75. In the long run, I think this market has the potential to hit 150. If you look at how the yen is performing relative to other currencies, the yen is way weaker. We've never seen a weaker yen. So I think 150 is likely to be attained very soon in this market, and these prices shouldn't go below 145 if we're directly going to 150, and if the markets have the strength that they have. I still adhere to my philosophy that I buy the highest and I sell the lowest. I buy strength and I sell weakness, unlike what many people are trained to do, which is buy weakness and sell strength. I tend to do the opposite of what majority of the people have been trained to do as a trend follower. So the last market that I look at is the DXY. So I won't go into Bitcoin. It's doing nothing, obviously. It's moving sideways. That's why I'm not looking at it for now. There's nothing to update you on it for now. We need to give it more time to at least break out. So if you look at the dollar, you can see clearly what's going on. We are trying to move higher. We're getting some resistance coming back lower. Then we get some buying demand coming back to the market. The trend is to the upside, yes, but we want some closes above some levels for these markets to rally. If these markets close above this level, 113.5, I think we could easily see 115 and 116.5, 116.0 coming in as the next targets. But if we break this P level and this trend line, I wouldn't be surprised by a move to 110 and probably 107.5. That would mark the first break of the trend line structure and the first break of the markets now starting to move lower. So that's my outlook on the DXY. I won't go into other things. The last thing that I'll look at is the 10-year yield curve. So if you have been looking at markets for a long time, you understand the meaning of an inverted yield curve, what it means for the 10-year yield curve, how important it is as an indicator of different things. So the yield curve is now at 4.01, 4.1. I think we've made a new highs which have not been seen for quite some time. And I think if markets make new highs, there's a likelihood they'll continue rallying in that direction. In line with that, I think the dollar is likely to come back a bit. And I think also we're likely to see other commodities sell off, like the Dow that I was talking about. Now I think the writing is on the wall for me. I think these markets will sell off again this week and probably next week as the yield curve keeps on moving higher. So this means that rates have been priced in at 4.5, and if you look at the current rates we have is at 3.2. That tells you markets are way ahead of what the Federal Reserve is doing, and just as markets are ahead of that, they'll also be ahead in the recovery. So be very keen on those ideas. Don't get lost in the fundamentals, forgetting that fundamentals are somewhat backward looking and markets are always forward looking. So with all those things said, I think I'll stop there. I'll catch up with you guys on the next one. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.